day traders, welcome back to Lord FS Academy. So in this video we're going to be talking about how to map out fair value gaps. Fair value gaps are imbalance in the market. They are a range of price where price have not yet filled properly or come to mitigate, and it's usually the body of momentum candlesticks. For example, when price does something like this, you see something like this, yeah, and let's assume that this is the momentum candlestick. This is that. Let's assume that this is the candlestick, right? Price did this, and this is the momentum candlestick, right? And this is the wick, and then let's say another candlestick comes like this at this corner. I think I'll go with my mouse. Right. Let's say another candlestick comes like this. Let's clone this, and the previous candlestick did something like this. So let's assume that this is a bullish candlesticks, right? All these are bullish candlestick and price do this. So this is the fair value gap here. This is the fair value gap from here to here. This is how you're gonna map your fair value gap. This becomes your fair value gap. Right? This becomes your FVG. And you map it out as FVG. So this is the range where there is imbalance, which means that price is more likely to come back here, right, to fill this imbalance either to the 50 fib level or possibly lower to the 60 fib level before going to the other side. So I'll just show you how to search for or how to map out fair value gap properly in your chart. So now, first I will just, because many fair value gaps has already been mitigated, so I will show it to both mitigated and unmitigated fair value gaps. For example, now if we look at this current market, let's see if we can go to XAUSD, because gold will have more fair value gaps because of the price range and the momentum of XAU. So let's see. So this current price in XAUSD is the fair value gap. This one here is the fair value gap. From here to here is a fair value gap. Why? Because this is an unmitigated area, right? This is a huge space that price didn't fill properly, so we are expecting price to come and fill this area. And this is one way you can map fair value gap. Let's see if we can map another fair value gap. Alright, there are a lot of fair value gaps in the market. Okay, so let's go to higher time frame. Sorry. And that is why one reason why I prefer using TradingView Web to TradingView app, because TradingView Web is very slow. TradingView app, I mean, is very slow in loading. For some reasons, I don't know why. So this is another fair value gap. This is a price range that price fails to mitigate from here up to this level. to this candlestick is a fair value gap. So price hasn't actually tapped into this fair value gap properly, right? That means we're going to be anticipating for price to come and tap into the fair value gap properly, moving towards the upside. So this is because our fair value gap. Let's edit our fair value gap indicator FVG, alright, and we're going to make it yellow. Good. So this is how you can map out a fair value gap. So when you talk about fair value gap, there are also other aspects you need to talk about, which is your Fibonacci. Fibonacci is a tool used to map out actually it's designed for trend line, to map out the 50% level of trend line or possible retracement level, right? It's a retracement tool used to map out retracement level, right, for mostly trend lines and fair value gaps, right? So this is the Fibonacci tool, this Fibonacci retracement, this is the Fibonacci tool. How do we use it? You can also get it by clicking on this arrow here. Then you can see Fib retracement. That is the tool. You can add it to favorite by pressing Alt F. So how do you use Fibonacci retracement to map out 50 Fib level of a FVG? You map out from the price level, right? It started, that is this one. In this case, it's from here to the price level it ends, that is this one, and this would be your retracement. So you map out this center here, or when we use a trend, this center here becomes your 50 Fib level. So this is the 50 Fib retracement level for your Fibonacci tool. So in this fair value gap, this is the 50 Fib level we are expecting price to come to, alright, and bounce back towards the upside. So this is how you can map out fair value gaps in the market. There are a lot of fair value gap, and I advise you to backtest your strategy and backtest it in your trading chart live, mapping out fair value gaps and how you can also use these fair value gaps into your strategy, how you can implement them into your strategy. Let me give you an option. For me, I always allow price to reach 60% Fib level before I go for whether is buy or sell. Sometimes something like this. Alright, let's say in this case now, right, in this current price, this one now, I will allow price to come to this 60 Fib level. Sorry, I'm supposed to trade it out around. Let's go again. I'll allow price to come to this 60 Fib level before I start buying. That will be here, right? I want to enter a trade at this 60 Fib level. Lots of traders use Fib retracement to trade. Well, I don't want to talk about that now. Well, I will do a video where I'll be talking about how you can use Fibonacci retracement to place trade and analyze markets in the forex market. I hope you found this video helpful on how to map out FVG. If you have any questions, please kindly put it in the comment section. I'll be there to always give you a reply, and don't forget to like, comment and subscribe. Thank you for watching.